So today in the markets, we had a bit of a news-driven day today, yet again. Markets were trading down and a little sideways for most of the day until about this period of time right here, the 1 o'clock-ish afternoon. And what happened here? Janet Yellen was meeting with politicians to discuss monetary policy, and it was leaked that she is not going to raise rates as quickly as maybe the Fed had initially indicated. So here we go again. Janet Yellen saves the day. So couldn't cross this little support channel down here. At this point, I'm just going to label this the Yellen put, because there's no way this thing's going down below. Because anytime that this thing gets down here, whether it's here, 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 or now today here, somebody comes in and talks up the markets. So once again, here we go again. And if it wasn't obvious to you already by now, the Fed isn't really independent. They're really working with the political party that's in charge in order to make sure political expediency is put ahead of the currency, which, take it for what it's worth, but it is what it is. And I could go on and on and on about that, but it is what it is. And like I've reiterated time and time and time and again, if you can trade every day in this market, you can trade in any market, period. It doesn't matter what's going on. So keep that in mind and look at this as more of a challenge for you to learn and trade better, as opposed for you to just say, oh, well, maybe I'll wait for the next time. No, get in and at least trade some virtual money if you're still not sure. But the only time that I've really seen this type of volatility action before was way back here, right there. And this is back in July and August of 2011. You saw this up and down motion all the time. And this was pretty news driven as well. Remember, this is the debt ceiling right here, the first one with President Obama and the Republican-controlled House for the first time. This is their first big fiscal fight, and that's when the sequester happened, and that's when the downgrade happened from, I forget which one it was, but it went from AAA to AA plus. And so currently we're still at, two of the rating agencies have us at AAA, one of us has us at AA plus, and that's not going to change in the immediate future until the next recession probably. But the bottom line is this: the U.S. economy is taking a turn for the south, regardless of what you see with the Dow Jones and the S&P 500 and the Russell and NASDAQ. People can talk up the stock market to keep it from crashing, but you can't talk up the real estate market. You can't talk up the labor market. You can't talk people into getting hired. You can't talk into companies stopping people from being fired. Like IBM is doing the biggest reorganization in its history. We have UPS, whose earnings just missed because of overestimates retail sales through the Christmas season. You have Microsoft going down 10%. All the bad stuff is coming around if you read between the lines. If you don't look at the GDP numbers, the unemployment rate, or the jobs being created, and you look at what's actually going on in the fundamentals, and the fundamentals are not only bad, they're taking a turn for the worse. So keep that in mind as we look ahead. Tomorrow the big GDP number for Q4 of last year comes out, and the way I've always looked at the GDP numbers is the government is going to let you see what it wants you to see. And what I mean by that is, the way they've been calculating GDP and the way they've always done it is they add up all the goods and services through their calculations or whatever, and then they reduce it by what's called the GDP deflator. And what that means is that they reduce the amount of goods and services by the annualized rate of inflation throughout that quarter. So if you think about it, if the central bank just printed $1 million and gave it to every single citizen, everybody would get $1 million, and they would all go spend that money. But that doesn't really increase the price of goods and services, because if the price of a stamp goes from 32 cents to $3.2 million, like it did in the Weimar Republic, that's not really increasing the amount of goods and services. So you have to decrease it by the value that the dollar was decreased throughout that time. And I believe they've been severely underestimating this. And if they accurately reported it, then the GDP numbers would not be so rosy. And for instance, excuse me, the GDP deflator for the third quarter of 2014 was 1.3%. Now, I don't know anybody who's watching this, but I highly doubt that any commodity or price of anything other than oil not only either decreased or increased by a rate of less than 1.3%. So I think that number is completely false. It's been false for so long. They're never going to report it accurately, because if they did, that they wouldn't be able to say the economy is booming again. They saved everybody from the greatest financial crisis since the Great Depression, 2008. So with that said, they're going to put the GDP numbers at whatever they want you to believe tomorrow. And that's kind of the way I've always looked at it. So keep that in mind when you see that tomorrow. So let's take a look at our trades from today. The first one was on Priceline. Priceline, as we move it forward, it opened at 1,005. Move it forward, and here's where we get in. Right here, cross below 1,000. I bought a 995 put for 720. Right there. And as we move it along, we're going back up, and you can see right here we set our stop as 1,005, and even though it touched 1,005, the way I input my stop was a trade above 1,005. So keep that in mind, and don't make your stop if it touches 1,005. Make it 1,005.1. I'll be sure to say that towards the beginning of all of the future trades. So as we move forward, goes our way. Here's our entry point. Goes our way. I'm seeing a zigzag forming right here. Now, you could have got out right here because it completed a pattern, and that price would have, I was looking at around 950 and got in at 720, 25% profit or so. But I decided to stay in because I thought it would go a little further. Then I see this consolidation happening right here. So we know it's going to break out one way or the other. It breaks up. You know, I didn't panic quite a bit. I knew it would come back down after the breakout was finished. And here it comes. Here it comes. So I'm seeing this resistance channel developing, and at this point I'm going to get out once it crosses here. So wherever it crosses, we're getting out. And it crossed right there. And I got out for $8. So you do the math on that. 11% profit. So we keep going, and the rest of the day it went up. So you got out a good time right there, and then the rest of the day is right there. So that was Priceline, and the next one was Netflix. That one opened today at 442. Our entry was 440. So went up, back down. It crossed 440 right here. I got the 435 put right there for 272, and we said our stop was at 442.5. This one didn't go our way, so loss 210. Got it at 210, and then here's the rest of the day. And then that was that was probably your biggest chance to get in, but the likelihood of you staying in after that, not likely. But you got stopped out. I mean, this is why we do the videos. So you can see, this is one of the big reasons I started doing the videos. So everybody could see my trades, my wins, my losses, the good, the bad, and the ugly. I mean, I'm not going to sit here and pretend that I'm the greatest guru, that I know everything, because I obviously don't. Otherwise, I'd be winning every single time. But I don't. So it's more of a exposure of saying this is me, and this is how I trade. This is what I do. These are my losses. You're not going to hide your losses for anybody. Then you don't look authentic, and then you're just another quote-unquote guru who's trying to steal people's money. I don't want to be that. So I'm just trying to show people how I trade. Hopefully you can take a few nuggets from it, make some money on your own like I have, and do a lot better than everybody else who's just throwing their money for good and doesn't make any money in this trading. And I don't want you to be that way. So there's our loss. It's unfortunate, but it happens. And the rest of the day went back up. So overall, it was a break even today. One on Priceline, lost on Netflix, and the other one we were looking at was Google. I said the entry was 516 going down, stop was 519. Went down anyway, but the risk to reward wasn't high enough for me to get in. And in addition, what I should have said yesterday but didn't was that earnings was coming out this afternoon, and it did, and it slightly missed on the revenue. I think it beat on the profit. Stock is pretty much unchanged, but the reason I don't trade the day before earnings is because volatility gets pumped into the options for people who are trying to gamble on the earnings. So that one didn't get in. A no trade on Google, a positive day on Priceline, and a loss on Netflix. So break even day. One thing I want to talk about before we get into today's trades is, how I was describing the direction of the markets yesterday. Regardless of the trend that's going on, you see whether it's a daily chart, a minute chart, or a weekly chart of any. Take a look, an example of our weekly chart. So this would be about a month's worth of trades. The average person sees this and says, oh, well, it's going up. And, well, if you have two eyes that are working, you'd be right. It's going up. But what's really happening amongst the weekly is something that looks like this. Some buying, some selling, some buying, some selling, buying, selling, buying, selling, buying, some selling. And since the buying is more than the selling, you have an uptrend. So this could be the daily chart, the minute chart, anything. And the reason I'm explaining you to this is the following. Here was yesterday at 2 p.m. in the afternoon, 2 p.m. Eastern Standard Time. Fed minutes come out, and all of a sudden, we're down here, we're doing our buying, we're doing our buying, selling, buying, selling, buying, selling. We get here, and we change colors, and boom, we do this. Right there. And this is the end of the day. Draw that a little better. This is the end of the day. So 4 p.m. Eastern Standard Time. Now, what's going to happen on the next day? We just had a whole bunch of selling. This is true regardless of what's going on. So if you go back and look at what happened when Lehman collapsed, if you look at the intraday days, you go back and look at that debt ceiling I showed you about the intraday days, you look at all the uptrends that look on the daily chart, they're all going to look just like this. So now what's going on? So let's change colors again. Let's go with, I don't know what color that is. I'm colorblind, dark red. Here we go. So now we have this 4 p.m. and let's call it 9:30 Eastern today. Can't believe I just wrote that. So now what's going to happen? It's either going to go down like that and come back up, or it's going to do this. It's going to go up and then come back down. Well, if you look at the video from yesterday, I prepared you guys to do this, this one, where it's going to come up and then go down. I did not prepare you for this one. And I pretty much assumed that was going to happen, and that's why we didn't make money today. Because it went up and then down instead of down and then up. So a better setup would have been something like Baidu, where you've had a down move for 3 days. This chart is not including today, but you've had 3 down days, or so to speak, a down day, a sideways day, and then a big down day. So you look at the minute chart. As I was watching this, while I was in the Netflix and Priceline trades, I was kind of glancing at this Baidu here. I saw it open lower and started to go down. So what does that mean? Since it went down big yesterday and it started to go down today, you know that eventually it's going to come back up. Very similar to this bottom guy right here. Very similar to that guy. Because it did this, it did the orange, and then it did the dark red. So as soon as I saw this downtrend, you draw the support, you draw the resistance line, and now look what happens. As soon as it crosses that, that would be a good entry point, and then you're looking pretty as it goes up the whole day and ends on a very high note. So there's 214 all the way up to 221, 220. That's a good day, but we didn't do it. So we know for next time, when you have that big down day, it's either going to go up then down, or then down then up. Now, on to today's trade. Tomorrow's trade is going to be on LinkedIn. So what I see here is the strong move down here, and then immediately after that happened, we had a massive move up this way. And on this massive move up, we had a retracement down here. And since it didn't hit the 78.6 level, which is what I like to look at as the stop of anything, any sort of upward movement afterwards, we're gonna take a look at this going up. And if you draw a little resistance channel here, you've seen this is pretty well spot on for the past 5 trading days. But if you look tomorrow, here's where the cross is. It's at 220. It's about 221. So unless this thing opens below 221, we're going up tomorrow. And given that it is a Friday, if you're trading the option, just buy it and hold it for the rest of the day. Don't if you're a stock guy, your stop's going to be at 220. Right up there. So there's our trade for tomorrow. Big move of significance up, retracement down. It took 3 days to go up, 5 days to retrace. We're going to cross the resistance channel tomorrow, and when that happens, we're going up. Don't worry if it opens high and then goes low. Excuse me. If it opens high up here, then does one of these. Don't worry, it's going to go up. So just hold on to it, and if it expires worthless, it expires worthless. You don't have to pay the commission to get out. But because Friday is the end of the week, options expiration day for the weeklies that I like to trade, we're going to hold on to it, and gamma's going to be higher than usual, which is the rate of the increase of the option depending on the price of the strike. So we're going up. We're going to hold on to it. So there's our trade for tomorrow, and good luck.